Welcome back, James. How are you, buddy? This is your kind of market. Mr. James Henry Anderson, how are you?
I'm good. Can you hear me well?
Yeah, got you.
Okay, great. Excellent.
Nice to hear your voice. How have you
Yeah,
been?
good, man. Good to be back. How you been?
Good. This is your kind of market. So the move looks like it's high probability of being underway here. What are you watching? What's on your radar?
Well, let's see. I'm gonna try and share my screen this time. See if we
Okay.
can get that done.
That's that little
Uh,
green button there, buddy. You
yep.
got it.
Okay. Let me know if
Okay.
you can see me.
We got it.
Cool. All right. Obviously, I'm just
See
showing you.
you or the chart? The
You can see the
FinViz chart.
chart. Yeah, the
Yeah.
FinViz chart. Right. I mean, we're
Right.
just looking at 1 year performance, and obviously commodities are starting
Yeah.
to surge now, right? I mean, I was looking the other day, even coffee is starting to break out. Get ready for record prices at your local Starbucks and, Dunkin' Donuts for their highly syrup covered coffee beans. But I mean, I can see it around here where I live. Coffee's in a massive bull market. There's record prices all the time for geisha beans here in Panama. So every commodity is breaking out. Obviously, gold and silver last year have underperformed. They kind of they've been consolidating, and the consolidation, by the way, in silver, it's never been anything like this. I mean, the consolidation we saw for silver in 2010 was pretty good sideways for a while in the high teens, and then we
Yeah.
busted out to mid 25, and then from 25 ran up to 50 pretty quick, and that was just a precursor. It was a lot like the mid 70s, kind of like the
Okay.
precursor to
You
where
weren't
this is
around
ultimately.
then, were you? How do you remember the mid 70s?
I look at charts
From your dad?
I look at charts and talk to grizzled vets like you, buddy.
I was, in my uh, you know, 20s, but
Yeah.
and I was there, but I don't remember it.
Yeah, a lot of people probably say stuff like that.
Anyway, so we had a range like so I mean everyone's making the 70s analogy.
Sure,
Are you
sure.
wearing a win button?
No, but
No, you're probably on the other side of it. Uh, LIN, let
I
inflation win.
yeah, I personally think inflation is going to be the way out. That's always historically been the way out. I don't see
Yeah.
the U.S. government defaulting outright and legally doing that, like something that like an Argentina type style where they just flat out default on their bonds. I think they'll just go the easiest route, which is high inflation for years and years compounding ahead. They've already been doing it with low interest rates, obviously suppressed. We never thought we'd see negative interest rates in a lot of these countries. So. Basically, for as far as you can see, the only thing in between here to there is probably some bank failures and a deflationary episode. But they'll come back in and hit the printing press again and start slamming the computers and printing more trillions. So that's the only thing they can do. It's obvious. It's to press the interest rates low and to keep creating currency to keep the system from falling apart. And then once it's about to fall apart, they'll probably do some type of political reset and create a new supranational, more of a multilateral system for the world to trade on, and it won't just be dollar dominated. It'll be multi-fiat currency dominated. The U.S. dollar is not going to zero. I don't think we're going to a hyperinflationary environment. I hope not. But there are those out there like Victor Sperandeo, a guy like him. He's been in the financial markets for a long time. I mean, he thinks that the prescription for this is 4 months of plus 50% inflation per month, and then you write off all your debt by 90% doing that. That's not what I would want. I wouldn't want to see that. It would be ugly. It'd be like pulling a real hard Band-Aid. But if you want to compete neck and neck with China in the coming decades, that might not be the worst way to do it. Is just to do it quickly.
How about 50 in the Dixie over the course of the next 2-3 years? Would that do it?
I don't think so. I don't think that's enough. I think you really. I mean, what he
Really
describes
cutting it in half is not enough.
Not enough. It's not enough.
Dollar.
No, I don't think so. Not unless you do a political reset and come up with some new system and everybody kind of muddles along. You could do that. And ultimately, my feeling is that we'll go back toward like a 1934 reset more so than a 1980 type, where we literally could have gone back on a gold standard in 1980. I don't believe that's going to happen. I believe they'll come up with some political solution where they claim it's commodity backed and that it has some gold lacing or what have you, but it'll be a scam, just like it always is with those folks.
Okay. All right.
So we're looking
yeah,
at this gold price chart, right?
yeah,
Obviously, this thing has been consolidating sideways. It's starting to look like it may break out. 1900 will be a big test. See if we can get past this
yeah.
1915 and into a test back toward
Well,
2000.
a lot of people, James, are looking at that it did break out. If you drew a trend line from the high in June
Sure.
of 2020 and then the high in June of 2021,
Mm-hmm.
1830-ish
Mm-hmm.
was a big level. To me, for the bullish scenario to continue, it's got to hold that.
Yeah, yeah. It seems like it will. And let's look over at silver real quick. Like I said, this has been the longest sideways consolidation. Let me back this chart out. It's just a little bit here, so you can kind of see the 2010 in. Let me get the logarithmic. All right, so you can see, in 2008, we obviously slammed down, but we moved sideways for a good bit here in the teens, and then all of a sudden, it just blasted straight up higher. And here we are consolidating in a larger range at a higher level. So, it could come at any point, but once you break beyond 30, I expect you'll see a wall climb back toward 50 very quickly. And this time, it's not gonna be that situation where we can't get through 50. I think ultimately, the Federal Reserve and the U.S. Treasury knows they need to let inflation run hot, and ultimately, silver and gold running higher is one of the easiest ways to do that. And so that's ultimately what will happen. The question is, how and when exactly will it go down, and by what reasonings?
Do you do anything in the minors, James, or
I do. I have one miner, only one, and it's just a bet on a really large mine in Russia.
Okay, so it's kind of like an exploratory, highly speculative one.
No. It's actually one that just pays a dividend, and it's basically because I believe their reserves are so strong, and I believe Russia is going to be a gold dominator of this world for the next decade or so. And this company is going to, in Siberia, there are huge gold reserves, and I believe that they have.
I hear they don't have to pay much for labor in Siberia, huh?
Yeah.
As you sit on a mountain in Panama, just collecting the royalties off the sweat of the brow of people that are repressed, digging out gold for you.
Well, Russia is already.
How do you feel now?
They're already a gold powerhouse, and I don't feel that bad because, I mean, think about how many people that we fed off on, in the emerging markets who make all the goods and services that we've gotten over on with our fiat currency. I mean,
you want to give the name? Someone's curious. If
I mean, the name. No, let me pull it up because I'll misspeak it. Hold on one second.
Stoli Minerals.
No, it's POLY.
Stolichnaya Minerals.
Hold on. Poly. The name.
Yeah, it's a nice flag. People are.
Here it is.
Paulus
sponsored. Polyus sponsored. It's a Russian company, obviously. So keep an eye out for the Russians. They're not that trustworthy. But this company, they have massive reserves, and it's a bet for a long-term bet. It's not. When I sell a lot of my bullion, I'll probably still have this because it'll be printing cash pretty consistently, I think, for the coming decade or so.
Okay, where are you selling your gold at 2,500?
No, it's much higher than that. 2,500. We're just going to be getting there. It's really a question of what are the fundamental. How is the currency market looking? What's the system going to be next? What percentage of my portfolio is it now? I need to draw it down because, I mean, the mathematics prove it. If you go back 50 years. Mathematically, in a fiat currency regime, you do the math on the back testing of it, you need to have about a fifth of your liquid net worth in bullion. And the question is which bullions at which time, which, precious metal, whether it be gold, silver, or platinum. I would suggest right now, silver and platinum are probably the most undervalued of the three. But gold makes total sense because it has low volatility, and it's just going to be, I think, a bedrock of any portfolio for as long as they're using fiat currency or fiat.
It's a flight to quality in the metals.
Yeah, especially in a world where fiat, CBDC grids are coming, where your privacy is going to be gone. I mean, having something that is very hard to trace and track, and having that you have outright with no counterparty risk makes total sense. So I think having it always, some portion, makes sense, especially in the world we live in. But I think at some point it's going to get into a mania phase, and you sell into that. That's what you do. But sure, sell into that.
Okay.
The other thing, let's look at another chart. We got a little gold silver ratio,
I was going to ask you. It looks like if you just take the last section from 79, it looks like a little bit of a Head and Shoulders top,
Yep. Yeah,
or
it's what it looks
and
like.
or is this a big Head and Shoulders bottom that we're putting in the right shoulder? You could
I
look
don't.
at it either
Yeah,
way.
you can look at it one of the two ways, and we're going to know pretty soon. If this
Yeah,
thing bleeds beyond, down towards 70 or beyond 70, I mean, it could get back down to low 60s and be beyond next year at some point.
yeah.
I would not be surprised next year if we go on a run and it gets back toward the 50s.
Okay.
It could
Yeah,
quite
yeah,
possibly
that
happen.
favors favors silver if you're a trader.
Yeah,
Your preferred long is silver.
and just back it out too. Remember that hedge funds are constantly using the gold silver ratio as a parameter for which one they have more of an allocation into. And when
Yeah.
silver starts running, they start really piling in momentum wise into silver, and it can really get going quick. And so it's a big, you can see this median range just looking in the last 20 years. Like, this is the median range essentially. You break below the 62 level, and now you're in a absolute breakout bullish market for bullion, for at least the monetary metals.
So, James, do you think the Fed that began a taper finishes the taper, or that there's going to be some type of pressure, or the economy, like after a lot of
Yeah,
economic indicators are already rolling over,
right.
and kind of they'd be assisting that rollover by continuing to taper and then tighten. Do you think they'll
Yeah, they're still creating
follow
100.
through, or are you a Ray Dalio in his camp where they'll start it and reverse it?
Yeah, I believe it's that. They're still going to be doing 100 billion a month, and they're doing it in order to keep the system from falling apart. And I think if they stop doing it, the system will fall apart, and that will be a real problem for them. So I think they're going to lie through their teeth, all day and night, just like they've always been doing. But it's going to become more and more obvious to everyone as time goes on, and credibility and confidence in whatever they're trying to do is going to start really falling apart. And that once you get a rush out of high net worth investors who have really small allocations. I've done the math on it. They're like low single percentages of, I'm talking about people who have 50 million or more in net worth in the world. And there's a
Yeah,
lot of those people today. There's
yeah.
hundreds of thousands of those people today, and they have very low allocations to physical precious metals.
How about
I
crypto?
Crypto, depending on what you're talking about, I would not bet on any crypto that is not going to be the underlying programming for the fiat CBDC grid. So I would not be betting
So
on
what's it?
Bitcoin. I would not be
Okay.
betting on, these high flying ones right now. I would be looking at ones that are technologically more sound, and ones that will actually be the programming underlying what the central banks are going to be doing. And that those will ultimately, there will be private tokens that will do well. Don't get me wrong, there will be, but they're only going to be a select few, and it's going to be very, very difficult for people to guess which ones those are. And a lot of people are going to get wiped out along the way.
Jane's guessing XRP. Is that Ripple?
Yeah, XRP is one bet that you could do. That is one of them that is underlying the fiat CBDC grid. There's another one called Hashgraph Hedera H bar. That's one you could bet on. I would suggest not going in pretty heavy until Bitcoin. If Bitcoin rolls over and does another crash, that is the time to be allocating toward these smaller ones that will be part of the programming of the underlying grid. I
It's
think
not going to
Stella is
crash.
another one is another name, but those
Yeah.
are like the there's a select handful or so that are actually being used to program various countries CBDC grids that are coming. And
So
it,
is
it all
my Lincoln 1909 VSBD still worth something after crypto came in here?
I don't know that one. I'm sorry.
That's
There's
a penny. That was the most desired penny in the penny collection book.
oh,
A
okay.
1909 VSBD.
Well, on that topic, when you're bringing up pennies, you know that
Copper.
the copper ones are 3 cents now, but the cheap zinc ones are almost face value. Pretty soon, those are going to be more in melt than the actual zinc. So you're going to see disappearing pennies of copper and zinc, and disappearing nickels. Both those are going to be going away. People are going to be melting those down illegally, of course. And I'm not suggesting that you do that, but get ready to see that in the coming decade.
Well, I'm telling you,
Yeah.
shortages
Uh-huh.
of everything. James, I mean,
Yeah.
well,
It's a,
I don't think Western democracies, if they still are that, are used to living without. Not since World War II, where they had to put wood on automobiles because they
right.
needed the metal for the war.
Mm-hmm.
And
Correct.
people collected everything back then. There were, and everything was rationed. Gas was rationed. Everything was.
What's happened before will happen again in just different twists and turns. It's just a little bit different with
Oh, you
technology
sound
these
like
days.
Solomon. There's nothing new under the sun.
There's
So,
absolutely nothing new. We're the
you're
same
very
flawed
high.
human beings. We're the same flawed
I'll
human
tell you
beings, Dale.
something, James.
Yeah.
This is the most energetic you've ever been during an interview. Okay. So I
Dale,
don't care if coffee beans are going up.
Keep it up.
It's not stopping you
I'll tell you
from
what,
having 20 espresso
they're
in
cheap
the
around
morning.
here, brother. They're cheap.
Yeah. All right. Well, you're probably enjoying it, and phone's ringing, and it's always nice to be validated, especially during like long consolidation periods. I'm glad for you, buddy, and you have ways where. Do you believe that people should mainly have possession and just find a good, secure place where they could get to their gold and silver?
Yeah, I
Or
mean,
go ahead.
first and foremost, if you're getting bullion, take some in hand. It kind of teaches you the learning curve quickly. Don't get too much in your house because it becomes a little bit of a risk. You can use Brinks, Loomis. You can go directly to these secure, storage facilities and get direct storage accounts with them. And then, you have your dealer deliver it to your, storage account, wherever it is. I mean, it could be in New York, Miami, LA. There's others offshore in Singapore, et cetera. So there's a whole bit. And then as well, if you just want to do a bet that's sound in a brokerage, if that's what you're used to, go with PSLV. You can see that chart right here. And right here, this black line where it goes up a wall, that's when the silver squeeze essentially started. PSLV would be a suggestion if you're going to do like a long-term bet. Only SLV if you're doing options and stuff. Otherwise, just read the prospectus. It's actually not the most secure way to bet on silver. If you're just doing it short term, go ahead. But I'm talking about long term bet. PSLV would be the brokerage option. But one thing, real quick, you can see that the Wall Street Reddit apes.
Oh
they're
yeah,
growing.
the Reddit guys. Yeah, they're getting ready.
And they're going to use them as the front run cover. I think underneath it all, you have Paul Tudor Jones talking about the bully crowd that's going to come into commodity markets. And they're going to come probably using Wall Street Silver retail as the cover for the headlines. But underneath it, they're going to be the ones ramping the prices of silver and gold. And, obviously, I told you 1934 is where I see. So this blue line, I think, is definitely targetable. You got around $7.5 grand right now. So that I think ultimately – and you look at these charts, just look back at like 2011, look back at 1980. This is GDP versus gold. We're going back to 20 at least. This is the, S&P. Obviously, we've had a kind of a dead cat bounce here, but you can bet that sometime later this decade that 2011 will be passed. So if you have a lot of gains in stocks, take some profits and go and put some in the bullion. This is housing prices, another dead cat bounce. It'll go below 2011. I would suggest that is going to happen. Same with silver. This is houses in silver in the U.S. 5,000 ounces or below is an easy bet in the decades upcoming. This is in.
So that means silver outperforms or housing comes down or both.
I would suggest silver outperforms. Housing nominally probably won't come down much because the inflation's going to go so high. So I would just suggest that silver will outperform in real value terms. That's really what we're doing. We're cutting the fiat currency out of the picture when we do these divisions between, houses versus gold or versus silver. This is Australia. You can see this is going to roll over back to 100. This is the UK. That was propped up in 2011, but I bet it goes back toward 100 back like in the 1980s era. This is in silver. Look at that 2011 low. And then, obviously they've been lying about inflation. We know that we're near almost 15% again, like we were in the late 70s. And so, the lag here for silver and gold to actually perform it is what it is. It's lagging because ultimately they have the power in terms of the derivative market until you actually have the high net worth crowd really run after the physical and the shortages ensue. You're going to have, again, a situation where there's going to be a shortage in silver bullion, deliverable in size at a reasonable premium over spot. And then that will lead into the gold market. That'll be the end game of this, where you have a literal gold shortage of a highly available gold bullion bars in decent volume at a deliverable date at a price that's anywhere near spot. You will have a huge premium for physical bullion. And the final chart here, this is it, Dale. This is the 1970 to now to 2021. The blue line is the price of silver throughout these 51 years outside of the COMEX hours. That has a price of silver at 230 an ounce. And you have the red line, which is spot, which, obviously we're at around 25. And then that black line is how the COMEX is always, it's always been a rape and pillage fest for the shorts there. And they've always taken advantage of the of the longs, and that is exactly why you see this bending between the price ranges, intra COMEX versus outside COMEX, and the spot price has been suppressed because of this action in the last 11 years or so. But you can see that the red and blue line eventually do meet. They've done it multiple times throughout this 5 decades. They will again, and when they do, it's going to be triple-digit silver most likely.
You know, James, you're a great ambassador for the precious metals.
Oh, I appreciate that.
And your passion and the charts that you break out, you can make anyone, like, you know, I feel like I don't have enough after talking to you.
Well, that's good.
Mean, you're really a great ambassador, and you really lay out the picture and the case for gold, probably better than anyone I've interviewed talking about physical metal before. So I really appreciate your analysis, and you could tell you've done all your homework and your conviction. So it comes across, and I guess, the best line to leave you with is, don't wait to buy gold and wait.
That's correct, Dale. And I appreciate the kind words. Thank you so much.
Yeah. So I mean, really, thank you, James, and keep in touch, and we'll get you back in the rotation, and we'll see what kind of prices we're looking at this winter.
Yeah, that'll be awesome. All right, Dale.
All right, buddy. James Anderson, and James is a broker. And,
yeah, I mean,
go ahead.
There. Yeah, you can find me on Twitter. That's probably the easiest way that you see right now if you're on Twitter, at James Henry And the website, the high volume business that we work on is sdbullion.com, based out of Toledo in Southeast Michigan.
Yeah.
And sdbullion.com. It's a top 5 retailer of physical bullion, silver, gold.
I bought from them before, but I didn't. I just had a call into my next purchase. You're my AE, and so it's a company that's been around for how long now?
Oh, since 2012, so almost 10 years now. Yeah.
Yeah. So reputable guy, and a company that delivers when you send the money. So, all right, that's a wrap on. In the meantime, I'm doing a short scalp, looking for a test of the breakout at 1740. So, don't be pissed off at me that I trade both sides of it. Okay,
it's
man?
Totally fine. I have no problem.
Right.
Just make sure you keep bullion if you're going to derivative trade around it. That's all.
Yeah, it's in I have some in my closet, man. I'm not going to tell you where.
No, of course not.
I mean, it's such a big closet. How's it? Anyway, my address is anyway.
Yeah.
Take it easy, my trading warrior brother, and you're like the Midas of the people that I interview. King Midas, James Henry Anderson.
Appreciate it, Dale. God bless you guys all.
All right, take it easy. That's a wrap, everyone. We'll see you tomorrow. See you, Paul, Richard, Chris, and thanks once again, James, for your giving spirit to bring your whole wrap here today. Adios. Hi, Laura, Monica, you guys. Adios. Oh, and guys, you could join the team, the Morning Edge. And for those of you, I brought it up yesterday, that miss hearing Steve Volge's analysis of all the pairs. Adios, Laura. Do what Blake said. Spend $1 and go listen to Steve in the Morning Edge. You'll get used to having him. You won't want to be without him. So I'll see you guys tomorrow. Okay, good hunting. Oh, don't just count your pips, count your blessings. See ya.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.